For hundreds of motorists across China, the impact of the war in Iran has become impossible to ignore. This week, petrol and diesel prices saw their sharpest increase in decades. Wang Sheng drives approximately 300 kilometers per day and fills up his tank 3 times a week. He now pays 18% more to top up than he did before the war.
Petrol cars are becoming unaffordable now, especially for professional drivers like me.
Beijing has adjusted prices twice since the conflict began. It reviews price caps every 10 days. The fuel price hikes would have been even steeper if not for the Chinese government stepping in to reduce the price increase by almost half. But motorists worry that support may not last. China is one of the world's largest crude oil importers. Before the war, about 40% of its supply passed through the Strait of Hormuz. Beijing has ordered refineries to limit exports of gasoline and diesel and other products such as fertilizer. So far, it's holding back from tapping into its vast strategic reserves, estimated at more than 900 million barrels. But there are some short-term winners. Rising fuel prices have accelerated interest in electric vehicles. Shares in major EV and battery companies have surged since the war began, with investors betting higher oil prices will push more consumers towards battery power. Still, those benefits may not last. Chinese officials warn a prolonged conflict will leave no industry or country unscathed. They're calling on Iran, the US and Israel to abandon force and return to talks.
The Strait of Hormuz is vital to global energy security and supply chain stability. Its continued closure will bring unbearable consequences to all.
Back on the road, Wang Sheng says he's so far absorbing the extra petrol costs, but says if the war doesn't end soon, he'll be forced to go electric. Katrina, Al Jazeera, Beijing.